Welcome to Balancing Act, your guide to grow, profit, and scale. I'm Linda Hamilton, a CPA, and I've been looking under the hoods of businesses to uncover what truly drives success for the past 30 years. This show is different because we know the numbers matter, but we also know that the story behind the numbers matters even more. So many things impact your growth and your profitability. It's about striking a balance between the two. So, today we're going to focus on financial fluency. We've been talking about the balance sheet, different financial statements, the profit and loss. This segment, we're going to think about cash. What about cash flow? The problem is business owners think their profit is the same as cash. That's almost always true. So when they go to get their tax return done, sometimes they will say, "What do you mean I owe taxes? I couldn't possibly have a profit. I don't have any cash." It is about the money and how things move in and out of your business. So it is critically important to understand that because many businesses fail within 2 years. And actually, more than 50% of businesses fail after even 5 years. Oftentimes, they fail because they ran out of money. And so we want to make sure that you understand how not to run out of money, how to monitor your cash flow along with your profit and grow successfully and profitably. Alana McNichol, a CPA and MBA, tax practice director for our CPA firm, is here to help you understand cash flow. Alana, so we often have these conversations with taxpayers every year who say, "What do you mean I have a profit? Where did the cash go? Where did the money go?" So let's start talking about what's the difference. Is there actually a cash flow statement in QuickBooks?
It's all about cash. As a business owner, we know that, right? Cash is the lifeblood of your company. It is what is letting you keep the doors open. So yes, we're looking for as much information about cash flow as we can possibly get. QuickBooks and whatever other accounting software you might be using definitely does have a statement of cash flows. And that is simply telling you what's coming in the door and what's going out the door, right? At the end of the day, it's all about what are the sources of that money, and where do you end up at the end of whatever time period you're looking at. And of course, we want the cash flow statement to be positive, right? We want your company to be generating enough cash that you have cash flow available. And so that's the snapshot there. I think a statement of cash flows is not one that a lot of business owners that I work with use, but the concepts are mission critical and to just keep your doors open, period.
Right, right. And when you think of cash flow, you're kind of thinking about the word flow, right? It's like water, lifeblood, like your blood flowing through your veins, right? You want the money continuously flowing through. When we were talking about the profit and loss earlier, we were talking about sales. So a sale is a transaction, right? Transactions happen every day, every month. They just go on, you have a sale, but you didn't necessarily collect on the sale. It might take you, unless you're in retail, e-commerce, or in a restaurant where you get paid right away, charged through a credit card, you have to wait for your customers to pay you. So that means you made a sale, but there's no cash to match it right now, right? And the same is true of your expenses. And one of those big gaps might be your vendors don't want to wait for you to get paid before you pay them if you need their help in advance. So how do you balance that, or how do you keep an eye on that?
It is a balance, yes. And I think it's the distinction that you made that sales don't necessarily equal cash immediately is one that's so important that I think oftentimes when you look at a financial statement, you think to yourself, "Ooh, I sold 500 grand last year. I'm doing great." Again, did you get that cash, right? The statement of cash flows, if 500 grand came in the bank during that same tax year, awesome, you're in the money. You've got the cash to pay for that profit, right? If half of those customers don't pay you until sometime next year, well, you're out of alignment here, right? So you do need to understand what payment terms are you offering your customers. Are you saying, sure, pay me in 30 days, 60 days? Are you basically extending credit to your customers, right? And let's think about that. Do I want to be my customer's bank, right?
Hmm.
Maybe not. Small business owners might decide, hey, you know what? I'm charging half upfront. And that is something that really, a small change like that, you might think, oh, my customers are never going to go for that. You'd be surprised. And that will just sort of ensure that you have this cash flow coming in more regularly at the time of a sale, right? And it starts to give you that ability to manage cash flow and then manage, the other side to that, which is your payables.
Right. And, one of the most important things sometimes when I teach my workshops for business owners across the country, they will say, I don't want to accept credit cards. There's a fee and I don't want to accept it. However, it's kind of like, what if they charge you 3%? And you don't have to chase your customers for money. You've already gotten the money. There are numerous stories online about companies that go out of business overnight because they ran out of cash. So being able to collect your money as quickly as possible is the key to staying positive cash flow. That doesn't mean you don't have to have a profit. So, profit year over year over year will lead to eventually cash as you collect it, right? But losses will eat your cash, right? So that means that you have to be making sure what you're selling is also generating a profit. That's that fine balance between profit and cash, because you can have cash without profit and you can have profit without cash. Both can be true, but you cannot have insufficient cash for a long time because your business won't be able to survive that period because you have bills to pay. You have to pay yourself. So let's talk about just a little bit about cash basis and accrual basis accounting, because I think most business owners really report on cash basis, right? That's what they know. They think what's in their QuickBooks file is all about, oh, I made a sale, I actually received it, or my expense happens when I paid that vendor. But then, at the end of the year, they might not necessarily match up. Can you just go over it a little bit, accrual basis and cash basis?
Sure. So, and this has a very material impact on the way your income is taxed, right? So if you are cash basis, then it truly is money hits the bank, it's taxable. Money goes out of the bank, it's deductible, right? Subject to whatever jurisdictions you're in telling you what you can and can't deduct. But basically, it's whatever hits the bank account is what you pay tax on, right? Versus accrual basis, which is truly you recognize revenue usually when you invoice it, and you recognize an expense when you get that bill, whether or not cash has either come in the door or gone out the door, right? So then you're sort of in the mindset of, okay, whenever I invoice and whenever I get an invoice, a bill, that is when I'm recognizing the profit and, in theory, paying taxes on it, right? So those are two very different ways of operating. They're two very different ways of thinking about your business. And I think it's very easy to not understand that, right? To have whatever back of the envelope method you have, and we all do. Let's not kid ourselves. Every business owner out there has that back of my mind. Here's what's coming in and going out. Well, is that what is showing up on your tax return? Maybe, maybe not.
Right, right. And that's what's really so important. So what we're saying is you might not have a cash flow statement. Maybe your accountant's not done one or a bookkeeper. That's okay. You still understand what's going in and out of your business. You could ask them to prepare one or at least help you to understand that. But you want to really know, not just for financial statements, how are we doing and where are we going, but what's going to be taxed this year. And understanding how you're taxed is critical. This can be complicated, right? Cash flows, balance sheets, these things. We don't expect you to understand it all up front, but it's helpful to have a conversation, to have a bookkeeper or an accountant who's patient enough to help you understand what these things mean. Over time, they do get easier to understand, But one of the most important things I've found over the years is those are on cash basis. I only have income when I receive cash or when I pay a bill, and they do their tax return that way. And suddenly they get this giant deposit in December that's for next year. They don't have any cost yet, and they end up having to pay tax on something. They don't understand why. So you really want to pay attention to your cash and how it impacts your taxes at the end of the year. This is important questions to ask your accountant. Alana, what questions should they ask? Can they reach out to you? What other resources are available for taxpayers and business owners to understand cash flow?
Yeah, I mean, cash flow, I really think is tied directly to your receivables and your payables. So make sure you're having a conversation with whoever's keeping your books about the accuracy of those numbers. Have we invoiced all our customers? Have we gotten all of our bills? Are there holes there that we didn't even think about? It happens very frequently that you didn't receive a bill that you thought you already paid, and suddenly it's in front of you. Oh, you owe this vendor 15 grand, whatever it might be. So keeping an eye on those numbers is really important. Definitely having an open line of communication with your bookkeeper, your accountant. And if you don't have that, give me a call, send me an email. We'd love to talk to you.
That's right. And thank you for staying with us this segment. Just remember, if you want to grow, you have to know where you're going and that you have the cash to fund it as well. Stick with us. We'll be right back. And in our last segment, we're going to talk about tax returns. How do you understand your tax return?